This is account number 1, blown. Account number 2, blown. What does your mum want to do to me? Blow me. Disgusting. Sorry, boys. So yeah, 2 accounts gone, blown, because I was entering the market with no structure, no discipline, and no real intent going into the market whatsoever. And this is yesterday. Same market, same me, but just a completely different approach. Without actually having a checklist, it's so easy to go down that route of just getting into trades. Like it was last week where I'd taken a bad trade and then I was switching biases, trying to get into another trade to make the money back, and then that one lost, and then all of a sudden I'm like 1,500 down on my account, and it all just happens so fast, bro. It's like you get this red steam over you and you just can't get to grips with what you're doing, and you're just trying to take entries here, entries there, and like nothing cleans in the market, and you're just fucking putting yourself into more loss, more loss, more loss, and you think it's going to come back and it doesn't, bro. This is the whole point I've made this checklist. So 1, I don't overtrade. 2, I don't revenge trade. 3, I haven't got the desperation of making it back. And 4, having a lack of patience. And this is the problem. Like trading can look like this to so many people. Like you're just entering trades, FOMOing in off your gut, and like you're seeing displacement. You're trying to get so close to a draw on liquidity that you're just clicking buy or clicking sell, and you're not waiting. You've got no patience, and you need some kind of checklist to hold yourself accountable before you press that buy or sell button. Okay, so here's the entry checklist that I'm going to be using. So number 1 is draw on liquidity. Draw on liquidity is massive because we need to be targeting somewhere. If we're not targeting anywhere with a clear direction where price wants to go, the trade just isn't valid. So I'm just going to show a kind of example here. So what are we looking at here? We've obviously just dumped like 1,000 points in pre-market. So already I'm looking at lower draws on liquidity. I'm not looking at dumping all this way up, all this way down, sorry, and then coming all the way back up like another 1,000 points. So I'm targeting lower draws on liquidity because my bias is bearish, right? So what have we got? We have all of this low resistance liquidity here. So we've got like 1, 2, 3, 4, even 5 here points of liquidity that we're looking at right now. So this is what I'd be looking at. I'll be targeting the lowest point of liquidity here, which is the New York PM low and previous day low. So that's what I'd be looking at. As I just briefly mentioned there, directional bias is number 2. We want to be moving in the exact same way that the higher time frame is. Now, obviously, I know we're in some kind of range here, but just use your logic in this sense. We've just dumped, like I say, from Monday all the way down to like Wednesday. We're looking at like 1,200 points. So my bias for the week is going to be bearish. So I'm going to be looking for what? Shorts. Unless I see something that presents itself where our directional bias changes, I'm looking at shorts here. Even though we're in a range, I'm still looking for lower draws on liquidity. So like I just mentioned, New York PM low, New York AM low, all of this low resistance liquidity needs to be taken out here, even if that's whether we want to push higher or go lower. We still have to take it out. Okay, so number 3 is liquidity sweep. This is one of my kind of confluences that I tend to look for. You know, just targeting these session highs, session lows, swing highs, swing lows, and obviously fulfilling all of the orders, the pending orders that are there, and grabbing any stop losses there to help move the market. So I'm just going to give an example where obviously we were in this range on the higher time frame. I've just dropped down to the 1 minute, and this is at New York AM market open. So we're just going to play some candles. Okay, so we manipulate lower. Okay, beautiful. So we do take out some low resistance liquidity here. So I would still class this as some kind of liquidity sweep because we've got quite a few points of low resting liquidity here. Okay, next on the list is, are we buying in premium or are we buying in discount? We want to obviously get the best entry where we can and obviously utilize the highest risk to reward on the trade. So are we buying in premium or are we buying in discount? So in this example, I'm just going to draw my Fibonacci from the swing high here down to the swing low. Now you can clearly see the 0.5 ranges there. We're very well into the discount, and we've also had a nice tap into the 0.786 ranges, which is one of the confluences I do use. So yeah, 0.786 on the OTE, which is the optimal trade entry, is something I like to see. And clearly we are obviously heavily into the discounted area here. Okay, so we've looked through the draw on liquidity, the directional bias, the liquidity sweep, and that premium discount range. We're now looking into the higher time frame confluences. Now, this is where I like to stack confluence as much as I can. We don't want to go so mechanical. We want to be much more discretionary with this. So whether that's a kind of just a higher time frame gap and then we're taking it off displacement, but you can get creative with this and you've just got to really understand the market. I used to be very mechanical in the way I've traded, and you then just end up missing entries, overthinking stuff if you haven't got certain rules. So it's all about just being discretionary in the market. So if we just go back to our example, right, okay, so a higher time frame confluence, we know that we tapped into the 0.786 range on our OTE. Our bias is already bearish, so we are targeting lower draws on liquidity. We also have an SMT on ES where we've taken out London high, haven't taken it out on the NASDAQ. So it's obviously just pairing all of these confluences. So we've had somewhat of a liquidity sweep. We've had a manipulation back higher. We have swept out liquidity on ES, being London high, but we haven't on NQ. We've then had that 0.7 OTE range as well. And then we've also tapped into a 15-minute gap and I think maybe a 5-minute gap there as well. Okay, cool. So then at this point, I'm looking at displacement and an entry model. I think these two kind of form into each other because sometimes displacement can be an entry, but we'll just go to the charts and see what we look like on the 1 minute. Okay, cool. So once we've tapped into these ranges, we've had the SMT, we've had the 0.7 OTE range, we've had the fair value gaps on the higher time frames as well. We just play out a few more candles. Okay, so I'm normally looking for a little bit more displacement than this, so we get it there. So my entry would be here. Although we're in this massive fair value gap on the 1 minute, our bias is low, so that doesn't matter to us. My stop loss will always be at the high because this is the next protected high. And my TP, like I say, could come all the way down to previous day low here, which is a what, 1 to 2.6. So a nice trade. So we just play some candles out. Okay, so we take out that New York AM low. We come back up into another fair value gap here. And then we displace. So that trades a 1.262, just over a 1 to 2 within probably like 10 minutes. Where are we? Where did we enter? 236. And we're out of it. So yeah, like literally like 10 minutes, just over 10 minutes. And I feel like this framework really just helps me actually enter trades, because before I would literally be looking here at this candle and without having that bias, I'll be looking at like, okay, cool, could we go higher to these even though we've already just dumped so much? I'll be looking at this fair value gap going, oh, okay, cool, we've just tapped into that. If we get a nice reaction here, and I'm taking an entry, I'm literally taking an entry off this candle, going to these highs, and let me just delete that one, going to these highs, and my stops are at these lows, and I'm immediately getting stopped out. So I feel like having that pre-market bias is like the biggest fucking thing that's going to change my trading. So yeah, boys, this is the entry checklist that I use. I also have like a little scorecard that I'll go through as well. So if I do have all 7 of these confluences, I do say that's like an A+ trade, and I would risk more on that. 6 out of 7 is an A trade as well. Obviously, like a B trade would be 5 out of 7 of these, but anything under kind of 5 or 4, I'm not really looking at taking it unless we've got something clear in the market that we're looking at just off market experience, I guess. And let me know if you do end up using this checklist and whether it helps you in your trading. And I will be showing more of my trade breakdowns in the next video using this exact entry checklist. So that is literally it, boys. That is my 7-step entry process that I take, and it's just not about overcomplicating it really. Like, end of the day, a lot of those confluences you can look at pre-market. Have we swept liquidity? Have we got a pre-market bias, a draw on liquidity? Like, you should be already looking at this stuff pre-market, so when you're going into the market, you've got a good idea of where price is going and when you're going to execute. You don't want to be in this situation where you're looking to tick off all 7 of these little points of the checklist when you're trying to enter a trade and missing your entries. So just try and find a lot of it pre-market, or as the market's going along. But as soon as you see your entry and you've got your 7 out of 7 or your 6 out of 7, 5 out of 7 on your trade checklist, you just know all you've got to do is press buy, press sell. There's no hesitation, and that's it really, boys. So I'll just leave it there. If anybody wants to use this entry checklist, feel free just to write it down or send me a message, and I've got a PDF version of it which I can always link below. Using this in my next trade recap anyway, and like I say, boys, this is the trade checklist that I'm going to start using every trade because it's been working for me. I'm fucking sweating as well. I'm fucking recording this at like, what's the time? 1:45. 32 degrees in Birmingham in England, bruv. State of this. But anyways, can't complain. I shall see you in the next one, boys.